Hello everybody. So this video is entitled 5 stocks that I like, sold off and cheap. I'm talking about stocks where revenue growth is entirely decoupled from the actual stock price. Actually, you'll see most of these stocks are technically at the same level as they were in 2021. But for many of them, the revenue is many times bigger than it was in 2021. It makes absolutely no sense. And of course, I'm covering stocks a little different than my usual HIMSS coverage, right? And that's because of a comment in the comment section. Someone said, oh, they wish I covered like different stocks like I used to do in the earlier days of the channel. So let's go. I'm doing that just now. So stocks that I like, 5 stocks I like. The first stock that I like right now is Sezzle. Sezzle, you may or may not know this, but it's actually one of the top performers of the past 2 to 3 years. Performance, more than 30 times your money. This is a stock that was about $2 in 2023. And now, of course, it is $60. It actually went as high as $180. And why is this stock doing so well? Well, because the revenue growth has been nothing but stellar. And whenever I cover this stock, I have to say this is not a typo. EBITDA margin is actually indeed 59%, which is absolutely unheard of. The growth predicted next 12 months, 38%, still in an exponential curve, for the growth. What does Sezzle do? Sezzle is an up-and-coming, super trendy, buy now, pay later company that Gen Z seem to love. And I listened to the entire conference call, and I was left very impressed with Sezzle. I've followed this company for a little while now. I was very impressed with how well they are doing in the buy now, pay later segment. Buy now, pay later, in my view, is obviously the disruptor of credit cards and credit card companies. Gen Z have grown to hate that type of credit card revolving debt. They hate it. They prefer the transparency of pay in 4, pay in 5. It's all about the transparency, and this company, I think, is winning in the space. There's another company in the space that I like, is Klarna. I think Klarna is also pretty darn good and pretty cheap. I don't like Square because it's Block, right? Called Block now, because Afterpay is not a pure play in that space. So I don't like Square. And I don't like Affirm because Affirm is too expensive. And if you go to my spreadsheet, you'll see Affirm is way more expensive than Sezzle. So Sezzle to me is the most interesting. Also, Sezzle is the one growing the fastest. So I like that quite a bit. Moving on to another stock that I like, Remitly. So Remitly is yet one of these stocks that, it's still down 70% from IPO. The price has not gone really anywhere in the past 3 to 4 years. But of course, if you look at the sales, they've tripled in the same amount of time. The sales since 2020 to 2026 have tripled. So 3x times more sales, and the stock price is actually down from IPO, if not flat. This stock I find very cheap. This is a profitable company, 17%. What do they do? Of course, Remitly, right? Remittance. Remitly is disrupting Western Union. They, I think over the longer run, crypto could be a threat to them. But for the time being, they are kind of this disruptor of, MoneyGram, Western Union in the remittance space, the remittance business. They're a mobile first, app first approach. So people tend to really love the app Remitly. They're introducing a pay over time remittance system, like kind of a mix between a buy now, pay later, but for remittance. So that's also what they're doing. Very interesting company in my view. Growth at 23% is fine. Is a little slow, but it's fine. Gross margin is 60%. EBITDA margin is 17%. They achieve a Rule-of-40 at 40. And EV over GP over RG is 0.13. Noteworthy for Remitly, I will note they have held up so well during this market madness and this market crisis. Everything's crashing right now, not Remitly. Remitly has actually held up really well, and I've been very impressed by that performance. Stock is cheap. I like it. Moving on to a third stock, which yet again, welcome to the club. 5 years for nothing, right? On Holdings, on running shoes. They are the winning running shoe, along with Hoka, you could say, who's taking all of the market share from Nike. They're taking market from Nike. Nike. It's a super high-end shoe, high margins. A lot of runners love the product, of course. They more than tripled their sales in a little under 5 years. Okay, and if you look at the stock price, it's flat. Right, we've lost all of the gains because of this crazy, crazy market that we're in. Yet the company is 3 times bigger than it was 4 years ago. Makes absolutely no sense. Company still predicted to grow 27% next 12 months. EBITDA margin is 14%, so it's squarely profitable company. Rule of 40 is a 41. Right, which is kind of a necessity. I want to see a rule of 40 in the stocks I cover. And EV over GP over RG is a 0.16. So I find this stock too cheap. To me, it's clearly the winner against Nike. And I know a lot of people talk about Nike, but I don't like Nike. Nike is big and bloated. This one is agile, and it's got, it's agile and it's trendy and it's got a lot of followers. So I like ON Holdings quite a bit. Moving on to a stock now, I can already anticipate the comment section. China bad, right? A lot of people absolutely despise China stocks, and they don't. They believe that China stocks can't be trusted. They can't be trusted because the accounting can't be trusted, and they entirely dismiss it, right? Just like some people entirely dismiss anything that has to do with Bitcoin or crypto. To me, everything has a risk, right? When I look at XPeng, yeah, I'm aware Chinese accounting is not as transparent, right? I'm aware of the risk, what happened to some of the Chinese stocks out there, but I'm also aware of the steep discount. When I look at XPeng, I look at a Chinese Tesla. That's what I see, and I look at a Chinese Tesla who has quickly growing sales. Like if you look at the sales, they are growing through the roof. If you look at their deliveries that were reported, I think last week or 2 weeks ago, they are growing like crazy. They're growing like a weed. This company is predicted to grow 47% next 12 months. They're actually executing, and you can see the revenue runway actually, being imminent, right? Unlike Tesla, where the runway is probably 27, 28, right? Tesla, the money coming in from robotaxi, that's probably 2027, a 2027 story, right? And the question is that for Tesla, when is it going to be in the stock price, right? As far as XPeng, they're expanding the car sales right now, and so I think this is a company where you could have a narrative catch on. You could have a narrative surrounding that company catching on, because if you look at it, to me it's a Tesla copycat. The founder Xiaopeng, so the founder of XPeng, is actually a huge Elon Musk fan. Makes shows a la Elon Musk, and it's frankly it looks like pretty good copying. There is. I mean, to me, it's I call it a copy. Remember that in Chinese culture, oftentimes copying is actually considered flattery, right? In Chinese culture, when somebody copies you, it could often be construed as flattery. It's a culture that's heavily influenced by things like calligraphy, for example. They copy and they do a better job, right? If you look at the demise of eBay, for example, in China, why? It's because Alibaba copied and they improved. Copy and improve. That's kind of the Chinese way of doing business. And to me, that's very impressive. They have a self-driving division, and they're doing their robot is extremely impressive. Look at the Iron Bot. Look at the demo of the Iron Bot. They are extremely impressive demos. They could, to me, they are comparable to the Tesla Optimus Bot demos. Absolutely outstanding demos. And they have one thing that, of course, Tesla doesn't have, but I think Tesla should have. I think Tesla should wake up to this, but they don't have it yet. It's the eVTOLs. They're working on eVTOLs. I think Tesla should be working on eVTOLs too, maybe at some point, but they are working on that. So to me, I look at a vertically integrated giant in the making in XPeng. So I like it quite a bit. And of course, it's very, very Chinese focused, a little bit of a Europe focus as well. But of course, I wouldn't like it if it were not for the price. I would not like that stock as 0.5. If that stock is going to be a 1 on EV or GP over RG, I'm going to look at Tesla and I want to own the best, right? But that stock is not like Tesla. That stock is, 10 times, more than 10 times cheaper than Tesla. Yet it's growing super fast. Rule-of-40 is a 48. So again, of course, Chinese company, right position sizing. Take everything with a grain of salt with Chinese companies. There's a lot of issues, I'm well aware. But to me, this is a very interesting play, and it works with the numbers. And the last one that I like, I've covered Celsius a little on this channel, a little bit, a few videos here and there. It's Celsius. I cannot possibly understand why Celsius dropped this much just because of a Costco copycat. So the stock lost something like 20% of its market value in recent weeks because of a Costco copycat. Like it doesn't even sell 20% of its sales through Costco. And just because there's a copycat doesn't mean people are gonna go for the copycat. It makes absolutely no sense to me. This is FUD, the reason why this stock has dropped. Of course, Aldi also released one of its copycats, and I remember they attempted to do FUD with the Aldi copycat. Well, it turns out with Costco somehow the FUD works better. Makes absolutely no sense to me why this stock has dropped so much, except that it could have traded with the market, right? Celsius could have dropped this much simply because it traded with the market, and anything future-oriented, anything that makes sense, anything that is absolutely unrelated to the Middle East has dropped like crazy. So that could be the reason. Rule-of-40 is a 63. Think about that. This is a super profitable company. EBITDA margin is 23%. This company is an energy drink company. They are, in my view, the only socially acceptable energy drink in the morning. They are trying to disrupt coffee. Just like any energy drink. They are going after Monster. Monster and Red Bull have a marketing that is a very, quote-unquote, extreme marketing, which does not fit the entire consumer segment. There's a lot of consumers, especially like female consumers, for example, who may not be attracted to the Monster marketing, right? And it's different than just making it pink, right? And Celsius has cracked the code of a gender-neutral energy drink, I would say, in the Celsius brand. And they own the female-only energy drink with Alani, which they acquired, which was the bare thesis. They eliminated that bare thesis when they acquired them. And so I don't understand. The stock is trading less than it was in 2021. Trading for less, and of course the sales are nearly a 10x. 10x, not quite, but well, it's actually what am I saying? It's actually more than 10x. It's almost 15x. The sales have almost 15x since 2021, early 2021, and the stock is flat. And that's because the market is entirely crazy and wild right now and just doesn't want anything that makes sense. Just doesn't want to do anything with the future. The market is all about the past. The market is selling you Costco at 50 times earnings. That's what the market is doing. So anyways, it makes absolutely no sense. Let me put them all together here if you want to compare and take a screenshot of why I like all of these companies right now. But anyways, let me know if you like this type of video since the market's closed. The weekend's going to be quiet. I could potentially do a few more of these videos this weekend if you let me know in the comments section. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.